Hi folks, David Waring here again with InformedTrades.com and the next installment in my Marketclub video trading diary. In today's post, I'm going to look at a trade I identified and entered using the Marketclub software in the SPY, which is the ETF which tracks the price action in the S&P 500 index. If you're new to my Marketclub trading diary and the Marketclub software in general, I've included some links below this video where you can learn more about what I'm doing here, as well as the Marketclub software. So let's get started.
I'm a little late getting this first video out, so for this video I'm going to cover my entry rationale for the trade which I took and entered on my blog last Friday, as well as the exit which happened at the end of today's trading. In future videos I will post my thought process in real time. As I talked about in my introduction video, we start with a weekly chart to identify the long-term trend in the market. As you can see from the below chart, we are in a downtrend as indicated by the red trade triangle issued on the 4th of September at 125.35. While the fact that the trade triangle was issued about a month and a half ago and at a price that is significantly higher than today's price is not necessarily going to keep me out of this trade, it is something that I'm going to keep in mind as I go through the rest of my analysis. Next we look at the daily chart, and we can see that there was also a red trade triangle issued on 10/22 at 91.65. Another thing that is clear on this chart, however, is that I need to be careful about ranging market conditions. As you can see from the first half of the chart and the last 10 days or so, when the market is not trending, the daily trade triangles are going to chop me up quite a bit. Next, I'm going to take a look at the Smartscan Score, which, as you can see in the image here, is at -100, indicating a strong downtrend. This also means that my fourth and fifth triangles are red, which meets my requirement for a short trade. The last step here is going to be to take a look at the charts and see what my discretionary analysis tells me. The first step I'm going to take here is to take a look at the monthly chart, which, since there has been such a large move lower in the SPY, is going to take on increased significance from a support-resistance standpoint. As you can see from this chart, I have outlined several levels of support and resistance on the chart, the closest of which from a support standpoint are 85 and 75. As you can also see on the chart, we have already traded through the 85 level once and recovered, and with this in mind, I think that the 75 area would potentially be a reasonable profit target on a short trade. As you can see from the daily chart, there is a fairly large triangle on the chart, and during the recent bounce in the market, we have had declining volume. Although we've had declining volume on the recent bounce from the lows, which is not something that is normally indicative of a healthy uptrend, we still have a series of higher lows on the chart, which is something to keep in mind. In addition to the pattern implications of the triangle, the top of the triangle also offers us a nice area to potentially place a stop, which I would see somewhere in the area of the 97.50 level. With the current close of 90.33 and a target of at least the 75 area, that would give us almost exactly a 2-to-1 risk reward on the trade, which is the minimum I would require. Lastly, if we trade down to the 75 level and break it, then there is a long ways to go before we hit another level of support, so there is a chance that this trade could be a nice runner even beyond that. And here's my update from 10/24. If the SPY looks like it's going to close below the triangle I outlined in my previous charts on the SPY, as it does in the chart here taken on the 24th, then I'm going to enter the trade. Since the market is trading significantly lower now than when I made my original post, I'm going to look to the middle of the triangle or the 92.50 area for my stop, still targeting the 75 area for this trade. And here's my update from later that day on the 24th. Okay, so the SPY traded up and touched the bottom of the triangle that I was watching and looked like it was going to potentially close strong above that line. However, it is held as resistance and the market sold off into the close, finishing up at 87.04, which is the price that I'm going to take for my first trade using the Marketclub analytics package. For my paper trading, I'm going to say that I have a $30,000 account balance. For this trade, I'm willing to risk 1.5% of that, which gives me a total risk of $450. I'm setting my stop at 92.55, which gives me $5.51 worth of risk on this trade. If I divide 450 by 551, I get 81.66 shares, which I'm going to round down to the nearest whole number of 81. So I'll be trading 81 shares here short at 87.04 with a profit target of 75 and a stop of 92.55. For the purposes of my paper trading, I'm going to exclude slippage and commissions. And here's my update from today. Okay, so the market staged a late rally today of about 11%. And while I was in the money on this trade yesterday, my stop at 92.55 was hit today, so my first trade here is unfortunately a loser. While I would obviously rather have had a winning trade, it is important to understand that as with any trend trading strategy, I'm going to most likely have a lot more losing trades than winning ones, which is why my minimum profit target is always going to be at least 2 to 1. That's my post for today, and I'll be back soon with another post as soon as I enter the market again using the Marketclub software. As always, if there are any questions or comments, please feel free to leave them in the comment section below, and good luck with your trading.